Masks are not sufficient. We need vaccines to immunize ourselves. The same is true for cyber attacks. Here too, we have to move from simple protection to immunization. We need to build IT infrastructures that have digital antibodies built in inherently to protect themselves.
And so yes, welcome to Cyber Polygon Week. Now let's get in with our market review for the week ending 9th of July 2021. First up, we've seen gold make some modest gains this last week and silver just get pulled back slightly on the week. Gold hit a high of 1818. Silver stalled at 26.77 before closing the week out above $26 and gold closing out above 1800, both promising signs. Onto our macro indicators, and we can see the Fed's balance sheets up once again and the DXY dollar index come down slightly, and that has certainly helped gold maintain some gains this last week. If we just focus on the gold chart here, well, we can see the recent support and resistance area is really above 1760, and that 1810 to 1820 mark is obviously very significant. So just watch out for those areas. If we do break through 1820, well, this would seem very, very positive. But likewise, if we break down below 1760, then it could mean that we're likely to head a little bit lower yet. Now, corresponding with the volatility that we have seen this last week, because we actually saw the S&P 500 go negative one day this week, to which there was an amazing outcry, almost expectant of the Fed to step in immediately, because it was over 1.5% down at one point. Now that has pulled the GDX Gold Miners ETF down to the lowest support zone that we can see in this triangle that's formed here. Nonetheless, it's recovered quite strongly, and this is generally just been fairly static over the course of the last 3 weeks or so. But of course, the big news that came out on Friday was how Britain has carved out an exemption for gold clearing banks from the Basel III rule. Now, I think this is really just going to be the start of a new story ahead, so I'm going to put some videos together on this topic and what it's likely to mean, why it's happened, and so on. Ultimately, what this does is mean that there is great risk still within the paper gold market. And yes, while it means that the LBMA can continue to trade as things currently stand and not face that higher required stable funding rate, it does mean, of course, that the paper gold market will not be deleveraged. Now, how will Europe feel about such a decision? Well, I can't imagine they're too happy. So I think there's likely to be a lot of disquiet, and if you extend that across to China and Russia as well, I think there's going to be a lot taking place behind the scenes here. And so moving it on, it's interesting to note, as Eric Young has been pointing out on Twitter, that Franco-Nevada, who I've been stopped out from now, as we had hit that resistance line that you can see highlighted in black there, really hasn't been dealt much of a body blow at all, despite the relatively substantial fall in the gold price that has taken place, where we saw gold fall from around about 1900 down to 1760 or so. We can see that the stock price of Franco-Nevada, while it had peaked over $150, had only fell to about $144 or so. So it's quite interesting to note that this is really suggesting that we are likely to see, of course, much higher gold prices. And of course, with such aggressive fiscal and monetary responses underway, I completely agree with that. Now, of course, it also depends on where 10-year rates in particular go and the yield that's available on government debt. But this is an interesting point to bear in mind here, that Franco-Nevada's stock really hasn't faced much of a fall in the face of the gold price falls that have taken place. And so if we now have a look at silver, here we've just got the weekly chart where we can see it's really setting itself up for quite explosive price action, I think. When will it come? Well, I think patience, as ever, is just going to remain absolutely fundamental. And so let's move it on now to have a look at oil and Treasury yields. And of course, we saw yields fall quite dramatically at one point this week before closing the week out at 1.36 on the 10-year. Meanwhile, WTI oil down slightly on the week. It's just coming on to those Treasury yields where we can see just how dramatic that movewards down is on that last wick on the candle there. So it's really quite a substantial move. And just remember how this nominal yield here often correlates very, very strongly with the gold price. So will we continue to see yields fall quite dramatically? Does seem certainly plausible, and certainly while there is some risk within the market and there is some concern within the market, this is likely to happen, particularly if inflationary expectations have peaked. So it'll be interesting to see what takes place there. Regarding our risk indicators, well, we can see that the Vanguard Utilities ETF, most bond-like stock in the stock market, of course, have done well over the course of the last week, down across the last month. So this is highlighting some risk, as is the TLT 20-plus year Treasury bond ETF, which has performed very strongly this last month. Nonetheless, the S&P 500 has continued to make gains, and I think we are likely to continue to see this melt up continue. And so looking at the S&P 500 and the 30-week moving average there, well, we can certainly see that the atmosphere within the stock market, and particularly looking at that last candle, despite that volatility we saw during this last week, the market closed out at another all-time high. And so if we look at the gold to lumber ratio, well, we can see lumber prices cooling quite substantially here. Now, I've just used the next contract in front to calculate this against the current gold price, and we can see that this is now at 2.39. Now, I wanted to use my data here so you can see that the corresponding movement upwards from the middle of May is quite strong, and so that is signaling that there is that much more risk. But it does seem as if we are likely to see the S&P 500 continue to move upwards, but we may be seeing some cooling of commodity prices here. On to Bitcoin, well, we can see that the amount of volatility within the market has really narrowed down. And this is a somewhat positive sign, but I think we're nearing the point where we may start to actually see some more dramatic price action, but the chart still doesn't look too great. And certainly from my perspective, it's not a point to turn ultimately bullish right now. We still see this big head and shoulders formation, and of course a break of that neckline and closing below there on the daily chart would really be significant to the downside. And so last week I'd highlighted the Russell 2000 small cap sector, and we saw that big pullback that had actually taken place this last week. You can see how long that wick is on that last candle. So it's interesting that it recovered quite strongly, but nonetheless it all remains within this rectangular shape, and this does seem to be a very, very nice structure for further price movement if it breaks this higher resistance line. And so while Klaus is enjoying his Cyber Polygon event, it's interesting to note that cyber security stock is also breaking out here. So this is just the First Trust Nasdaq Cyber Security ETF, and you can see it's broken out of this this very, very positive structure that it had formed here in this triangle. And the volume seems quite supportive as well. So this looks like quite an interesting option here. But of course, that's my opinion, not financial advice. Another cybersecurity stock I've just been tracking is this one based in Paris. This is Thales, and we can see that this has just broken out as well and has moved out strongly on the last week. So interesting to see what's taking place in the world of cybersecurity there for sure. And so we've seen gold-silver ratio close out 69 this last week. And I hope that's been a useful look through the markets over the course of the last week there. Thanks ever so much for joining me, and I look forward to seeing you next time. Bye-bye.